Today is Monday, June 22nd, 2026. On Market Lens, the global market map is split. Emerging markets and real estate show the cleanest opportunity scores. Japan remains strong but stretched, while crypto and China equities sit at the riskier end of the board. The key question today is whether investors are seeing durable leadership or just selective strength inside a more fragile risk environment. Today's Market Lens ranking moves from steadier opportunity to higher risk. Emerging markets and real estate lead with opportunity scores of +2, supported by uptrends and normal volatility. Japan follows with strong momentum but a more stretched setup. Metals and Hong Kong are range-bound. U.S. equities are mixed with elevated volatility, and the weakest readings come from China equities and crypto, where downtrends remain the main concern. Emerging markets equities rank near the top today with an uptrend, normal volatility, and an opportunity score of +2. VWO is above both its 50-day and 200-day averages, with positive 5-day momentum and only a modest stretch above trend. That creates a supportive setup without looking overly extended. The main tailwinds are steady price action, normal volatility, and easing energy pressure for some emerging economies. The main risks are a firmer US dollar, higher treasury yields, and country-level uncertainty beneath the broad index. Bottom line, emerging markets currently show one of the cleaner opportunity profiles in today's Market Lens. Real estate also scores +2, with an uptrend, normal volatility, and a near-trend stretch. VNQ remains above both key moving averages, which keeps the broader trend constructive. The setup is not overheated, but the recent 5-day decline shows momentum has cooled. The biggest support is stable volatility and the potential for rate expectations to settle if inflation pressure eases. The biggest headwinds are still higher treasury yields, elevated mortgage rates, and weaker short-term momentum. Bottom line, real estate looks constructive, but it remains highly sensitive to the rate backdrop. Japan equities remain in an uptrend with normal volatility and an opportunity score of +1.5. EWJ has strong 5-day momentum and sits well above both its 50-day and 200-day averages. That confirms leadership, but also creates a stretched profile, with the index flagged as overbought versus trend. A weaker yen can support exporters and overseas earnings translation, while global interest rate pressure and tighter domestic policy can make the rally more sensitive to pullbacks. Bottom line, Japan remains one of the stronger trends, but the setup is no longer early or low stress. Metals are in a sideways regime with mixed volatility and an opportunity score of +1. Gold and silver are both below their 50-day averages, and the group has negative 5-day momentum, so short-term trend quality is weak. At the same time, oversold readings could allow stabilization if selling pressure fades. Gold may still attract defensive demand during uncertain macro periods, while silver remains more unstable with high volatility. The main headwinds are a stronger dollar, higher yields, and choppy price action. Bottom line, metals look tactical and range-bound rather than clearly trend-driven. Hong Kong equities are sideways with normal volatility and an opportunity score of +0.5. EWH is oversold and trading below both its 50-day and 200-day averages, so the short-term tone remains weak, even though volatility has not become disorderly. Potential market access reforms and lower energy pressure could help sentiment over time, but China-related growth concerns, currency pressure, and cautious global risk appetite remain important headwinds. Bottom line, Hong Kong is not breaking down aggressively, but it still lacks a strong directional edge. U.S. equities are mixed, with elevated volatility and an opportunity score of -0.5. SPY and QQQ remain in uptrends, but GOOG and NVDA are sideways, and technology leadership looks uneven beneath the surface. The broad index is still above key averages, while QQQ is overbought and more vulnerable to pullbacks. AI infrastructure demand remains a major support for parts of technology, but higher treasury yields, mega-cap pressure, and elevated volatility create a more fragile tape. Bottom line, U.S. equities still have leadership pockets, but the overall setup is less clean than the headline index suggests. China equities remain in a downtrend with normal volatility and an opportunity score of -1.7. MCHI is oversold, but it is still more than 6% below its 50-day average and more than 12% below its 200-day average. That means any rebound would be occurring inside a weak, broader trend. Policy support and liquidity efforts may help sentiment over time, but growth uncertainty, currency pressure, and global rate conditions continue to limit confidence. Bottom line, China equities remain fragile, with rebound risk but no clear trend repair yet. Crypto has the weakest reading in today's market lens, with a downtrend, high volatility, and an opportunity score of -2.5. Bitcoin and Ethereum both bounced over one day, but both remain far below their 50-day and 200-day averages. The very oversold condition could support stabilization attempts, but the broader setup still carries elevated downside risk. ETF flow weakness, higher yields, a firmer dollar, and softer technology risk appetite all remain key headwinds. Bottom line, crypto is trying to stabilize, but the regime is still high risk and trend negative. Go beyond the highlights. Get the full Market Lens report in your inbox. Powerful AI-driven insights on global markets, critical news, risks, and opportunities to help protect and grow your money.